welcome to The Trade. Before we get to the charts that matter, let's have a quick look at what traders are watching out there. We have seen oil prices tick up after Israel and Lebanon. Oil prices have ticked up after Israel and the Lebanese armed group Hezbollah traded accusations that their ceasefire had been violated, and as Israeli tanks fired on South Lebanon. Russia has unleashed its second biggest attack on Ukraine's energy infrastructure, triggering deep power cuts across the country. Copper prices edging down, weighed down by a stronger dollar, concern over global growth and demand in the top metals consumer China, and gold prices higher amid geopolitical uncertainty and trade war concerns, while coffee futures have turned lower after touching their highest in more than 2 months. White sugar prices also falling. Let's get into the technicals now. Thomas Atkinson from FX Evolution joining me. I was just talking about the fact, Thomas, that we seem to get to 8,400 or above on the ASX 200 and the next day we pull back. Why is there such a resistance there?
Yeah, so I think it's actually more to do with the US. So obviously we're hitting the 6,000 on the US S&P 500. This is a huge, what we call core wall, circulating on the 6,000 level in the US. We're struggling to push through it properly. Until that happens, it's going to be hard for any of the markets around the world to really move too much higher. So I'd say it's more to do with that. Here we've got a chart for the Australian market. It actually looks really strong. So I think I wouldn't worry too much about the 8,400 resistance. In general terms, markets are actually looking pretty good for the end of the year. Usually I've run the data, I've run the stats on it, and generally speaking, post-election, whether it was 2020, 2016, even 2012, we saw quite a lot of growth over the markets for the next 3 months. And traditionally, they were quite good. So things to watch in the future, if we do end up getting pullbacks, the weekly 20 moving average, which is this red line here, will be something I'm watching. But I think all signs are still pointing towards the Australian market potentially having a decent start into 25 as well. Maybe healthcare is starting to come along as well.
All right, well, speaking of healthcare, CSL, we had this on the call yesterday and it was a double buy from both the guests. What are the trends telling you?
Interesting they're saying that now, yeah. So, look, I think it's the same thing. I think that the buy is fairly strong here for healthcare across the market segments at this stage. And the main reason is because they've underperformed for so long. So if you actually zoom this chart out, we don't have it here, but if you looked at the chart from 2020 to now, CSL has done probably zero. So it's done a 0% return, which is obviously horrible. Now, we often talk in investment technical terms as what I call it a pit or a pullback in time. That is that time is the most important asset to all of us as humans, and it also is important to all trading instruments. So you've got a quality asset like CSL, ran very hard for a long time. People remember that. It's a huge part of many viewers' portfolios probably, and then it's underperformed. And I'd like to see this actually start to tick up. So strong price rejection off the 270, that's a fantastic thing. Love to see that. And then, of course, if we get past that 290 level, which I've said turn zone for CSL, which we're getting closer to, that's really a sign that the market has said, okay, I support the 270 price. I'm buying strongly off that level. And then on top of that, I've made a higher high. And in technical analysis terms, the biggest thing is to see a change of trend. And while we've seen strong pickup, we haven't quite seen a change of trend. So to me, it's a very strong level. I do think that healthcare will perform better in 25 across the board, including the US. And in this case, CSL is looking good. So let's see if we can get above 290. That'd be strong.
All right. I was just talking about iron ore prices and somewhat of a retreat there when it comes to that $100 a mark level. Fortescue is such an interesting stock because it hit close to 30 and then it pulled back. It's now just under $19, but still a lot of sort of bullish momentum. What are the technicals showing you for Fortescue?
Yeah, so I've done the analysis on copper, iron, and obviously China. So these all impact FMG. So the way that I see it is FMG is a very good stock to get to kind of like a pseudo China trade on. So if China's stock market starts to improve, Fortescue will generally improve with it. Iron ore is a big component of this trade. So from what I'm seeing here, though, this is actually a pretty good technical setup. So we've gone from a switch of lower lows and lower highs on the left-hand side to this significant uptick that we obviously spoke to you guys about on the show. We kind of thought China was going to see that huge boom, and we also thought it was going to have the huge bust. So that was lucky for us. But in this case, we've pulled back, and we've pulled back to a 61.8 fib on the HSI, which is the main China Hong Kong index. So that's starting to see a little bit of uptick. We're starting to see FMG finding bid. And I'll just let the viewers know that if you actually look through history, November, December, January, and February tend to be the stronger months for iron ore. So let's see if it can happen again. I mean, it's happened every year for a while now, but of course, not everything is a guarantee. So in this case, it's starting to see nice action. Would like to see, of course, HSI break out to a new higher high. We'll probably be back on the show talking about this in a few weeks, I'd say.
All right, look forward to it. Wesfarmers, 71.45. What is it looking like? Is that sort of a good level for Wesfarmers?
Yeah, I think it is. I haven't looked at Wes for a little while, but it's been into consolidation pattern for some time. And now we've moved through November very strongly into this Black Friday period and the sales, and it actually broke above that 71.20 zone. Now, this is strong structure resistance break, because what that's telling you is, again, a pullback in time may have just been going on. We haven't really seen any gains. If you bought this pretty much in May of this year, you've made nothing until now except for the dividend. So what that really is telling us is that it's had that pullback. Now will we see continued strength? The good signs are we broke above 71.40. That's a strong area. And I've put a little green box around $70. I think 70 being a psychological zone as well, being also a demand, all sorts of different technical levels, anchored VWAP, daily 20, lots of things. I like 70, and I'd like to see it if it can pull back a little bit here and find a bid there. I'd like to see a bid at around $70.
Now, I just had a fascinating conversation on Ethereum, Thomas, and probably the best elevator pitch of what it actually is that I've heard. And it's, essentially the guest was saying, Ian Love from Blockchain, I should give him a shout out. It's as if you can kind of invest in the internet, was his sort of elevator pitch, if we think of Bitcoin as digital gold. When we look at the price targets here, what is Ethereum showing us?
Yeah, I was listening to that. I kind of have a sentiment of more bullishness in Ethereum. It's based on data and history more than anything else. I mean, Ethereum has always been well known in the crypto networks as being kind of as you can say, the internet of crypto or something like that. But in general, I think the thing is that it's what we call alt season. So people are looking for this. They've been looking all year for alt season. It hasn't come. And in this case, we just saw Bitcoin have a massive rise. Everyone's talking about it. Traditionally in crypto, when everyone's talking about one of them, you probably don't really want to be just looking at it because it's already happened. So we saw crypto go from about 55 to about 99 American. So in this case, Ethereum is starting to strengthen. Now, we were on the show talking about this only a little while ago. We saw a left shoulder, head, right shoulder formation. That broke up, but Ethereum is actually so much more interesting than this, because there's a relationship between Ethereum and Bitcoin. I hope we have the chart. I did share it. And what that shows you is that Ethereum is now trading at a ratio that is historically low. So we don't usually see Ethereum this low to Bitcoin. It's back to where we were before kind of the 2020, 2021 rise. It doesn't mean it can't go lower, but I started to see bids on this last week. Now, I'll just let a couple of people know some interesting stuff about Ethereum. We saw the largest trade ever recorded in a 2x leveraged ETF of Ethereum 2 days ago. Now, the market then boosted up a little bit. That tells me generally that some larger player started to accumulate or was in the position. Now, it doesn't guarantee that Ethereum's going, but with the ratio being this low, with the breakout happening on Ethereum over the last 48 hours, and with obviously those targets that we had in mind in terms of technicals, there's a lot to like about Ethereum, and it's also around the right time. I did a study on all of Ethereum's history 9 years back, and what I found was that December, January, February, March, March, April, May tend to be pretty good actually for it traditionally. So yeah.
All right, and just a quick one on what US small caps are telling us, Thomas.
Yeah, this is the rotation that I've been discussing on the show for a while. So it's really happening now. This is it's a post-Trump kind of rotation. It's also a very strong kind of signal that the market is broadening. So what's happening is that the US big Wall Street managers have moved out of the Magnificent Seven, and they've been doing so since August of this year. And they've been moving into mid caps in particular, and now starting to move into small caps. So look, in markets, you've got to be able to rotate. And what that means is you have to recognize when it's good to own stocks, and then when it's good to rotate out of them. I always like to think of it as a quadrant. Basically, you have overperformance, and then you have declining or lagging, et cetera, and it kind of goes through this big squiggly worm around in a circle. In this case, it looks like small caps have actually started to really get some improvement, and that's because of valuations. I mean, we've got a mixture of deregulation in the US, probably from the Republicans. We've also got a huge kind of stimulus due to maybe getting some further tax credits, which are going to help these companies. People forget 36% of the Russell 2000 don't make any money. So there's no profit. And these guys have to do a lot of debt rolling in 2025. So the market was concerned about that and giving strong discounts to it. So we're seeing these trade around 16 times forward PE. The market in the S&P, taking out the Mag 7, is trading at 19. And the normal market, I think, is trading at 24 if you include the Mag 7. So we have small caps looking good.
Okay, Thomas, always great to chat. Thank you so much, Thomas Atkinson there. All right, that does it for this edition of The Trade. Be sure to join us again next week.